Intimate in-person trading conferences in some of the greatest cities in America. It's Market Rebellion Live. Next up, this June in Sonoma County, California. Savor some of the finest wines in America while you level up your trading with Pete Najarian, John Najarian, AJ Monty, Ryan Mastro, and Bill Johnson. Sonoma is limited to just 25 seats to ensure every guest gets personal attention. So act now. Tickets are going fast.
There it goes.
117.
117, check. Poor Jared's thinking, God, that's a lot.
In case you were wondering, Jared is that guy right there.
Oh,
Jared, producer.
He's our producer. See? I will say this too. For a moment, he was not only going to be the producer, he was about to become the other host because we hadn't seen John. We were like, hey, man, yesterday he had a drink. Today he might just stay at the bar and say, the hell with it. Screw it all.
The hell with it. Gotta tell you what, Pete, it is the best. And we're still 7 hours ahead of you guys.
Yeah,
but we were up there on the mountain and God, what did I have? I had spaghetti with olive oil and garlic with some pepper flakes on top, Pete, because you can eat like that when you're over in Italy at the top of the mountain, as opposed to, oh, here's a cold hamburger for $27 at Aspen or whatever.
Yeah, but
I've been there. I know it's true. But you are tuned into the Rebel's Edge, folks. It's February 22nd, 2023. He's Pete Najarian. I'm John Najarian. As we've already said, Jared is running the board today, as he does virtually every day. And we're going to dive right into the 1 minute macro.
Let's do it.
Give it a whole minute. There we go. 1 minute macro. I'm going to say, Pete, it's going to be 25 basis points from the Fed today. And then because Bullard and Kashkari and a whole bunch of the Fed governors, voting and non-voting, are so damned and determined to get inflation genie back in the bottle. They're going to talk tough. He, in particular, is going to talk tough, answer questions, and then the market will react. And I don't think it's going to like what he has to say.
Yeah, and they've been leaking this, John. I mean, obviously we've seen more and more commentary that's been coming from Bullard and others. And they've got their ideas, and whether you agree or don't agree, they're going to throw them out there. It's going to affect the markets. There's no doubt. I think that was part of the effects even that we were seeing yesterday when we opened down 300 points and then finished down 700 points. So the markets have gotten volatile. We've got volatility back into them. And that part of things oftentimes as a backdrop can be good for guys like you and I, John, who like to trade. Speaking of which, we got 4 coming at you right now.
Exactly. Starting with Palo Alto Networks, because shares are up pretty good today, and they're up because, and in fact, last I checked, Pete, we were on course for the biggest one-day jump since August of last year. And that's because they beat and they improved the outlook going forward. Not a lot of firms are doing that right now, but they did, and they're being rewarded for it.
And that's been the problem, John, is what is the outlook? You and I talk about it all the time. That is the most important thing for people who don't understand that. It's great to find out what you did on the quarter, but what have you done for me lately? What are you going to do for me? And that's exactly what we're seeing right now. Palo Alto, great outlook, John. How about those numbers, though? I'm looking at earnings. We're only up 81% year over year, 81%. Revenue up 26%. Those numbers are massive. These guys got a lot of cash sitting there as well, John. I looked it up. They've actually had 10 acquisitions over the last 3 years with that free cash flow that they've got as well. So these guys are positioned very, very well, and understandably. Cybersecurity, is there anything more important right now than that? I would say there are a few things maybe right up there with it, but this is pretty much close to the top, I'd say.
Speaking of tops, Pete, it is right at the February of last year top. Now, that wasn't the ultimate top. The top last year came in March, but it was right here at about 187. So let's keep our eye on that. If you're lucky enough to be long a stock that's up 19 bucks, buy yourself something nice, but don't think that it goes straight through there. I think it might have to oscillate a little bit and gather itself.
I had a call spread in there, John, and I took it off today on a triple. So I got lucky. But, you know, you try to work luck into everything you do. If you get good luck, that's awful helpful. They came through so well that the good luck really did stand out.
Absolutely. Absolutely. Love it. Let's talk about Wix, Pete, WIX. Also up pretty good today. 2022 revenue growth was about 6% year on year. That's not usually enough to get people excited enough to buy the stock, but they beat consensus by, you know, about $4 million, which is pretty good for, you know, the revenue side. And they're getting a lot on the creative subscription revenue. Wix, for those of you who don't know, they help you put together websites. So if you're somebody who's never done it before, it's tough. But with a Wix basket of products, it's much easier. And that is where they're making their money, helping people.
Yep. And John, these guys, they've gone from a company that was burning cash to a company that's got some nice cash flow. These guys absolutely crushed it on the earnings side. They were looking for 8 cents, John. They reported 61 cents. I mean, that's absolutely outrageous, but it's a great thing. And obviously, we're seeing the outlook side of it that you mentioned. They raised the outlook for revenue 7 to 9%. For the full year, they're looking for a 9 to 11% raise. So they're really looking at a company that is on the upswing and looking like it can continue to do this through 2023. You got to like that. And I think that's why they are getting rewarded so much today.
And if you draw a line, Pete, to a year ago, it looks exactly like Palo Alto Networks. I mean, that line would be straight across from this time last year to where it is right now. In other words, same thing we already said about Palo Alto applies here. If it can break above, and AJ, our chart expert, always says, you know, hey, when you get to a resistance level, you can break through. You almost always reverse and go back down. You could pick things up cheaper on that. And then a couple days later, it goes back up and uses that as a floor. So just pay attention to some of AJ's videos, and it'll certainly help you with that. All right, Pete, take a look at Keys, Keys, Keysight. So these guys, it's all about communication, and Keysight technology helps a lot of the companies that are looking to measure electronic measurement of technical companies and things like that. So earnings spectacular. Another one of those that it's a 14% move, Pete. Keep an eye on this one, KEYS, because that one's been moving since early in the pre-market.
Yeah, it's been an interesting one, John. They kind of took her out to the woodshed a little bit because of the outlook. Like we've talked about, that's what people are looking at. But I'm looking at it from this perspective, John. Their numbers looked pretty damn good. They got a great, you know, and you look at the fundamental side of things with the cash flow and everything else, that all looked pretty good. The outlook being a little bit disappointing, I almost feel like that is setting things up a little bit, John, for an opportunity here in this name, because when you look at what they did year over year with their revenue and their earnings and all the rest, I think that this is a great opportunity off of a sell-off. Now, I normally wouldn't say that because of the outlook. This outlook disappointed. I don't think it disappointed that much. I mean, the stock was down 14%. I think it's a great opportunity down here.
Yeah, and keep in mind what Pete and I were talking about with Walmart yesterday, folks, because Walmart made it all the way back into the black yesterday. Now, Walmart is giving back, what, 2.75% today again, Pete, but not down to the lows that it hit yesterday. The low yesterday was 142.15. It's over $1 higher than that still right now. So Keys, great report, I thought, but traded down hard. I think that creates an opportunity, and there's a bunch of support levels right where it is right now. All right. How about ZipRecruiter, Pete? ZIP. This one down 23% early on. They guided margins and revenue down substantially. And anytime you do that, just like Pete said, you're going to see people moving to the sidelines, if not just getting out of the stock, because they lowered guidance by about $100 million, Pete. That ain't good.
Yeah, sales dropped 13 to 15%. I mean, they've got a lot of work to do to get themselves back in. And they talked about the fact, John, that people just aren't, the job posting world is slowing down significantly. This is not good for somebody like ZipRecruiter, obviously, but they're under pressure. And you look at the volume, John, what they're turning over as far as the shares, over 5 million contracts. They normally trade about 700 and some odd thousand contracts in a normal day. This is not a normal day for them. This is one on this drop. I am not interested in buying it, John, because as you look forward, as I look forward, I'm not so sure that we aren't going to continue to see what they are projecting for 2023, which is, hey, look, people are going to probably slow down on this whole thing. And that's going to be a huge problem for Zip.
Yep, I agree. So we seem to be in agreement on staying away from Zip, perhaps picking up a couple of these after they bounce back, because again, like AJ Monty says all the time, you will break through to the upside and then you will reverse, go back down. That gives you the opportunity for those of you who aren't in it, like Pete was in Palo Alto today. All right, I'm going to talk about SPY, Pete, because ahead of a Fed that's, this is, of course, again, that 2-day Fed meeting. Ahead of that, we've got a bearish put roll. What does that mean? That means somebody bought 2.5 million share equivalent in SPY, the ETF for the S&P 500. And when they do that, they are setting themselves up to basically sell, sell, sell. And, they paid $2.90 for each one of these. Every option's for 100 shares. So that means almost $300 per option, $290 per option. They did that 25,000 times. That's a big investment. I like following people who have that kind of commitment to their trades. So that's a reason to at least be wary into this Fed speak in just a little bit.
And John, you always wonder, and I'm going to skip on to mine now, which is Altria, MO, the old Philip Morris, whatever. But it's interesting because I am not going for this because of the fact that it's got an 8% dividend, but it does have an 8% dividend yield. So that's something I think that does attract a lot of people in an environment where we are right now. Clearly, people look for certain things, and I think that is definitely one of them. They look for that, and they look for the ability to maybe be able to put on positions and sell options against stocks and all of that kind of thing. I would say this, the free cash flow is what really attracts me to this company. It's trading inexpensively. It oftentimes does. I'm not worried about sin trades, by the way, John. And I know that's an old expression that we used to use, but with the alcohol and the cigarettes and all of that, that part is not something I'm overly concerned about. I'll trade those stocks all day long. And I will tell you this, the stock was pushing right up against 48 today. It's eased back a little bit, but extremely short term. And understand those words. These options will expire on Friday. They bought 15,000 of the Friday expiring 48 calls. 20 cents, John, up to about 30 cents. So let's middle it and say 25 cents for these options. That's what it was. It might even be a little bit cheaper now. But you've got the rest of today. And obviously, this is one of those areas where when people get scared, they run to certain areas oftentimes. This would be one of those stocks that I think you might see people run to. So if we see the markets look anything like we did yesterday or a continuance of any of that, we could see this stock start to make a break to the upside. I like the risk reward as well. Fairly inexpensive. You can leverage yourself and get an opportunity. If it doesn't happen, it's not the worst thing in the world. So these are the kind of trades that you love, I love, and I put this one on today as well.
Nice. And like you say, sin trades, my God, now we've got cannabis as well as psychedelics that trade on the NASDAQ. So it's a wild west out there when it comes to sin trades, Pete.
Yeah.
All right. So I saw that you wanted to talk about the NBA, which that makes 2 days in a row, Pete talking about the NBA, which is a new record.
Yeah.
What do you got to say about the NBA, Pete?
Well, it's actually not even necessarily just the NBA, John. What I wanted to focus is on something that we just focused on just a couple of weeks ago, and I think it's worth a revisit. It's partially the NBA. I'm talking about the Boston Celtics. They are the team right now in the NBA. Absolutely dominant. They are absolutely killing it, and they're leading the entire NBA as far as wins and losses stand, at least right now. But what I also wanted to point out was, who's the best hockey team in the NHL right now? That would be the Boston Bruins, by the way. The city, and you look at that, John, of all of the cities in America right now, you've got NBA, you're sitting in the number one spot. NHL, you're not just sitting in the number one spot, John. This team got to 40 wins as fast as any team has ever gotten there in the history of the NHL. It took them 53 games to get the 40 victories. How about this? Their point differential, all that means is goals made versus goals against. First of all, there's nobody with a better goaltending world than the Boston Bruins right now. These guys have given up 118 goals, but they've scored 210 goals, John. Now, I don't talk about hockey all the time. I am not the biggest hockey fan in the world, but I will tell you this. These guys are crushing it. The only one even close to them is the Ducks. Actually, that's the reverse, because they're a negative 96 as far as differential. And meanwhile, these guys are a plus 92. That's a monster number. Nobody's even close to them, John. They've got 56 games in right now with only 8 losses on the season. So it gives you a little bit of an idea. They're doing everything right. Oh, and by the way, home ice, 24-2-3 is their record. I mean, these guys are dominating the entire league. Nobody's even close right now. And potentially these guys could set records because they are right on track to do exactly that. And who knows, why not? But it made me start thinking, what other cities out there do we see where we see this full domination? Because you know what? You don't see it quite like we're seeing it with these two sports right now, John. But I don't know. It's not the Bulls and the Bears. We both know that. It's not the Timberwolves and the Vikings. That's not one of them. So I'm not really sure who we could compare to these guys right now. They are absolutely on fire. Oh, you got one. Who you got?
Tuscaloosa.
Yeah,
Tuscaloosa, Alabama, Alabama football and Alabama basketball. Yep. Both of them, and you've talked about it before too, Pete, but yep. Alabama basketball is right up there, number 1 or 2 program in the country right now, which is right where their football team usually sits as well, certainly top 5. And usually they're, in the hunt, but they had the tough season this year with, Tennessee surprising them. Yeah. But other than that, I think this is Tuscaloosa is the college town, Pete, is the only one I can think of that comes close to what's going on in Boston.
That's a great call by you. I totally agree. We did talk about it, and those guys are unbelievable, and they've been somewhere near number 1 for this entire season. And now it's Houston number 1, but Bama's been there, and you're right, and their football program and basketball program hand in hand are awesome. All right, so number 2, Lamar Jackson. You and I both know who this guy is. We knew who he was in college probably before a lot of other people did because we follow a lot of football. The kid not only won a Heisman Trophy, but then he goes to Baltimore, and all he's been is absolutely electric if he can stay healthy. So that's kind of part of the story here, John. He's a 25-year-old guy who doesn't mind running the ball. As a matter of fact, his average carries per year is about 140 to 150 times a year rushing with the ball. And that's been part of the problem with him getting some of those injuries because he ain't Josh Allen. We both know that. Josh Allen's 6'5", 240, 250. This guy's 6'2", about 215. That body is not ready for NFL hits the way he's been having to take them, so he's gotten hurt a couple times. Where should he sign, John? I'll give you 4, and then maybe you'll break it down and tell me which one you think makes the most sense. I'll give you the number 1. Is it Vegas? And the reason that doesn't sound it sounds crazy at first, but here's why it's not. Josh McDaniels, well, he coached Tebow. He also coached Cam Newton. He understands quarterbacks that'll run with the football. So could he potentially be a guy who'd be able to handle him pretty well? I'm not so sure, but it gives you at least the idea after what Cam Newton did for so many years, whether it's Carolina or up in New England. the guy was a freak show. You and I got a chance to meet him and talk with him and see what a big freak he really is, because that dude was a monster. But then you got the Jets, and you've got a running back in Breece Hall. You've got receivers in Wilson and Moore. So you're pretty loaded. You've got good tight end, a decent offensive line, not great, but a great defense. So that's not a bad landing spot. Baltimore just re-signing right where he was. That's not the worst thing in the world either. But somebody out there, John, has salary cap issues that are a good problem. They have nothing close to the problem of everybody else, which is they're pushing or above the salary cap. Atlanta Falcons. Now, they're loaded. The city would love to have a guy like Lamar Jackson. They've had other dynamic athletic quarterbacks in the past. It would make a lot of sense. I don't know. I'm throwing those out at you and just figure I'll let you choose and what you think. If you were his agent or if you were a GM, where do you think he lands?
I think Baltimore would be really foolish to lose him, Pete. So I still think that Aaron Rodgers goes to either the Jets or the San Francisco 49ers. But let me throw these to you real quick, Pete. The franchise tag for a quarterback right now in the NFL is $32 million because they use a formula, folks, and you have to be paid. What is it, Pete? And at the average of the top 5 quarterbacks or top 5 at your position, something like that. The linebacker is number 2, $20.9 million. Wide receiver franchise tag, $19.7 million. And then D ends, D tackles are basically right there at 19 as well. I think these are numbers that obviously scare some people away because you throw a franchise tag on a guy. Yeah, you get to hold him for one more year, but he's going to be bitter and you're going to pay him a lot of money in all of these cases. You're not going to pay him Mahomes money, but you're going to pay him a lot. So I think Baltimore would be somewhat foolish, Pete, unless they could really deal him and get the right package. I think they'd be foolish to let him go.
One last reason why Atlanta does make some sense, John. They got 3 picks in the first 3 rounds. They've got the 8th pick in the first round. They drafted a quarterback last year who fits in where he is, and he's young and he's not getting paid a whole heck of a lot. Or maybe you throw him in there just as a little bonus or something like that. Who knows? But it could be pretty interesting to see where Lamar really ends up, because at some point, John, is he frustrated that the Ravens never were able to get this thing done? So does he have any anger maybe in him that says, you know what? I want to move on just because you guys wouldn't give me the money when you had the chances. And now that you're squeezed, you're going to try to do something. And how will they do that? How do they stay underneath the salary cap? I mean, it's the one thing that makes the NFL so great, John, is that salary cap, because you can't just stack up players. It gives every team an opportunity. Now they might screw it up, but they all have the opportunity to spend the money how they want to do it. So it could be pretty interesting to see if Lamar actually does jump, and I wouldn't blame him if he did.
I wouldn't blame him either, because we both know, because, again, you talked about it 6 months ago, Pete, when the season was just getting started. He said, once season starts, I'm the negotiator anyway. I'm doing my own contract. I don't need to pay somebody else because I know what everybody makes. Yeah. So you're either paying me what I want to play for, or we're not talking until the season's over. And he stuck to his guns, Pete.
Yep.
So like you said, that might be one reason, though, that he's not as bitter, because he refused to negotiate during the season. Right. That wasn't Baltimore, but again, the issue of the salary cap, that's going to be something that all these good teams are going to have to deal with. Yeah. Some of them are going to lose some. I mean, Green Bay, if they can dump Aaron Rodgers off of their Pete, they can sign 5 players for what they're paying him. 5 studs.
Yeah. Yeah.
Not quarterbacks, though. Not 5 quarterbacks. All right. Well, thanks for joining us, folks. He's Pete Najarian. I'm John Najarian. Of course, Jared handling the boards. We appreciate it, Jared. We'll be back tomorrow at 1 p.m. Eastern Time. See you then.